Hi, welcome back. My name is Kay Wittmann. I am a DSCR deal specialist. If you don't know what DSCR deal is, basically it's buy and hold deal that fund with DSCR loan. Um, I also have a DSCR deal analyzer, which is used to today analysis. Link in description. And again, if you don't know what DSCR is, welcome to typing me email. Love to answer any question if you looking to buy and hold property. We fund 40 states around the country. Okay, all right, let's get to it. So today this deal is duplex. I typing some of the address already here. So if you are looking at Zillow, you don't really need to buy lead. To be honest, to you buy and hold mostly for mature investor. This you can look on Zillow, Realtor.com, or in Homes. Um, you know, just for Zillow itself, there's so many deals out there that actually you do not need to buy lead. That's my bottom line. And you put here the address and square footage here. They built in 1965. Square footage is 1765. Okay. So I'm just typing in here already a little bit early today. So today interest rate for DSCR is about 65. You have a 700 score plus. Down payment 20%. Long term you can leave it 30. Insurance, so you can come down here. I just typing in here a little bit early today, so I kind of roughly. What did I put? Did I put it correct? So yeah, 2,100 per year. And the tax rate here in Sacramento, this code I know is about 1%. If you don't know the tax rate to verify, you can Google and double check it, or you chat GPT. And then 51 here. So my mortgage for this duplex is 3267. Let's say the income, okay, they're saying that vacant, it's actually full occupancy. Yeah, full. Two unit, 2-1 and 3-1. The 2-1 is rented for 1795, just right here. And then the 3-1 on 1695. Interestingly, is the 3-1 is rent income less than 2-1, meaning that they probably just updated 2-1 unit. So that potential rent growth for you. Okay, so we just leave it like that. 1795. The income is 3490, and let me get it. And then monthly mortgage 3267. So the SDR is over one, which is good. That's that to find a lender. Okay, but as an investor, you should dig a little bit further. You have vacancy, your property management, maintenance, and the capex reserve and overall. If you don't know what it is, vacancy, if you fall, you still should put some. I would always at least leave for 5%. Property management, even though you self-manage, you should put 5% at least. Maintenance, for this one, look like it needs some work. So even though full occupancy, I would say 5. Cutback, it doesn't seem like it's need big items to do right away. Yeah, so I'll just leave it 5 cutbacks. Okay, so we set aside about 8,376 a year expenses. NOI at 33,504. So cap rate is 0.4, which is not bad. I say not great, but not bad, So it's like 7. I kind of this kind of property I like kind of 7% cap. It's more like Class C property. And then I move on. So now you know your cash flow after NOI minus your mortgage. Your cash flow is negative 4.5. You see here is a paper loss. Okay, don't be panicking, but as an investor, if you not very know the market very well, if it's not very chill positive here, you should not go for it unless you really know the area very well. That just will appreciate. Okay. So let's say here, let's say we continue to the end and then see how it goes. We may go back to negotiate the price. Okay, a closing cost 3%. Rehab, I don't think we need to put any for now since it's full occupancy. We also set aside capex already. So, alright, cash on cash negative, which as it is, because when it the cash flow negative, when it cash flow negative is your cash on cash technically negative too. Rent growth, I won't go with three. I would say in that area, I would live like, to be conservative right now. Expenses growth, I will say one. Yeah. Cost of sale is 5%. When you sell 5%, when you list for sale, unless you close off market, you don't need a realtor, you might end up to like 1% cost of sale. All right. So your IRA 2.5 to a 6 ROI. So projection return is not look that great. You know, insurance, yeah, we have a little problem there. Insurance. So let's say this property, I will not go for it. Let's just say 7. Yeah, they asked for 525. My target is 5 2. Let's say I go back with 475 for this one. 475. Go back here, revise the price. Okay. My cash flow look still negative, but almost less half of that. Okay. Yeah, still not quite good deal. Still, I would pass for this. I mean, but if you know the area very well, and you like paper lost, to deduct your high income, that's probably not a bad deal either. Alrighty, I'm going for now. All right, we'll see you next time.